Welcome to Breaking Banks. You're back with the number one podcast and radio show on fintech globally. Of course, we've been doing this since May 2013. Today, we are taking a dive into the African fintech scene, and joining me all the way from Kenya, from Nairobi, the brothers Paul and Eddie Ndichu, who are the founders also of WapiPay. Paul and Eddie, welcome back to the show.
Thank you very much, and very nice to hear from you again, Brett. This is Eddie.
Thank you so much, and so happy to be back. Thanks, Brett.
May sound the same every now and then.
Yeah, so Eddie, firstly to you, some of the listeners may remember we did a walk around on the streets of Nairobi, trialing M-Pesa back in, I think it must be 2018.
I think it was 17 or 16.
2017, yeah, 2017 or 16, yeah. So it was a while back, but it was one of our favorite episodes, actually, the M-Pesa episode. We were very fortunate. Eddie got us the opportunity to meet up with Bob Collymore for breakfast. Bob Collymore unfortunately passed a couple of years ago, but he was in many ways the brains and energy behind the M-Pesa brand for Safaricom. So I really valued that visit to Kenya. We also met up with the central bank governor, in Kenya at the time. It was a fantastic trip, which we were able to share with you guys, obviously, on the radio show. So let's take a quick flashback back to that trip Breaking Banks made to Nairobi, Kenya, and our interview with the late Bob Collymore, who was at that time the CEO of M-Pesa. He'll be dearly missed, but here are some of his insights on how M-Pesa had an effect on Kenya in terms of mobile money movement and financial inclusion.
Well, look, I've been involved in the company for 10 years, actually. So I was here when the product launched. There was a lot of resistance, actually, even from our own distribution base at the time, because people couldn't kind of see it, and they couldn't see how they could make money out of this. In the 6 years that I've been here, we've more than doubled our customer base. We're currently sitting at about 22 million customers out of a total mobile customer base of about 26 million. Now, if you take the population of Kenya as being 4 to 5 million, half of whom are adults, you can see we're capturing pretty much every adult in the country. We're transmitting probably about the equivalent of 40% of the country's GDP through the system. And, at peak, we're doing about 600 transactions per second, which is faster and more voluminous than any other banking system.
In 120 years, KCB has established one of the largest banks on the African continent and have had over 4 million customers in Kenya alone, or close to 4 million. That's around 10% of the population. But those fights with M-Pesa? Well, here's Bob Collymore again from Safaricom.
Well, banks saw it as a threat, but more recently, banks have increasingly started to see it as complementary to what they want to do. We now work in collaboration with about 40 different banks, and we have some deeper relationships with a couple of banks. One is the Commercial Bank of Africa, and the second is the Kenya Commercial Bank, KCB, with whom we started to really deepen financial inclusion to give people access to microloans, micro savings, and you can now save from as little as $1 for one transaction, which is cheaper than you can do. Actually, I don't think you can do it in any banking system, frankly. M-Pesa does a couple of things. It is safer, it is more secure, and it's cheaper. And so people who want to move money up country, they would put the money, lodge their money onto M-Pesa, onto a SIM card. And because they're scared of being robbed, and if you're robbed and you have your phone and your SIM card taken away, or indeed if you're taken at gunpoint, then what they do is they sew a number of their SIM cards into their clothing. So when they get to the other end, they still have the equivalent of $1,000 in each one of those SIM cards.
Now, I heard another story. I don't know whether you've heard this, but in some of the villages up country, people can't afford to have multiple mobile phones, so they share a mobile phone for the village, but everyone has their SIM card. Is this apocryphal or is this a real story?
No, it is a real story because mobile penetration it's getting better and smartphone penetration is getting better, but there's still pockets where people don't have the phone. But actually, I can give you some more interesting stories. So if you take the refugee camps, for example, we've been working with the World Food Programme to deliver food aid as an electronic voucher onto a SIM card. Now, where the refugee doesn't have a phone, but they do have a SIM card, they simply pop the SIM into the phone of the shopkeeper, do the transaction, and take the SIM back out.
Today, we're going to talk about WappyPay and their new startup. Well, technically not new. They've been going for a couple of years, but they just raised a couple of $1 million to digitize African Asia trade payments. So maybe, Paul, why don't you start with us telling about, what does WappyPay mean? What's behind the name,
Well, thanks, Brett. So, WapiPay comes from the word wapi. Wapi is a Swahili word meaning where, and basically WapiPay meaning where in the world would you pay? And you're very right. We just set it up just almost 2 years ago now, and largely looking at started looking at remittances and cross-border payments within and around Africa.
Fantastic. And you guys, you started this just as the pandemic sort of hit the world, didn't you? You started into 2019, early 2020?
Yeah, absolutely. I mean, we left.
Hell of a time to start a startup, guys.
Yeah. Didn't see it coming by February 2020, but no, we started seeing quite a number of things. When we started looking at cross-border payments within Africa, we very clearly chose to focus on Asia, the Asia corridor, largely because when you look at remittances across Africa, the premise is largely for sending money back home for sustenance. Yet there's the other flow, which is the payouts, and that is 3, 4, 5 times as much as the money that comes back home. So when we set up right at the beginning of the pandemic, looking to build our blueprint, which was Kenya, China first, which we ended up doing very well. We saw some interesting things. We saw governments, first of all, make mobile money, more easy, free actually, and easily accessible. So people would move into making mobile payments as opposed to using banking infrastructure to do payments and daily payments or even cross-border payments. And then we started WapiPay. We got customers before we even had a tech platform, and we saw our customers demand to make payments now on their mobile phone, given that everyone was all on lockdown. The country was locked down 2, 3, 4 times in the year. So we expected, I think, going into the first quarter after the announcement that payments, cross-border payments would go down, given that largely our cross-border payments is largely for trade, focusing on Africa. But we actually saw the inverse. We recruited more Chinese customers or customers based out of China. Remember when the pandemic happened, it first kicked off from that corridor, and the Chinese community here needed to send money back home, and they needed a convenient way to do it. We also had corporates wanting to do salary payouts very quickly and very much more often to support people back home. So in the first quarter, we expected things to go down, and given that we thought we'd get more African customers at the beginning, but we ended up being more Chinese customers, and our volume started kicking in, and we saw this continue throughout the year. And by the second half of the year, we saw local customers, from Kenya, Uganda, Tanzania, start to have quite a fair bit of demand for the need to make a payment for their suppliers and for things to sort of resume and come back into the trade, get back into doing business and doing trade.
So you guys are doing remittances as well as trade payments, right?
Yes, that's correct. We're incorporated out of Singapore, and that's where we started off from. And then now we're now incorporated in Kenya, and seeking a license here as well. We're licensed under the Monetary Authority of Singapore.
Very good. With my friend Sapendu Mahanti out there at MAS, heading up Fintech. So in 2019, remittance flows to sub-Saharan Africa were about 50 billion. But it's obviously expected to go up. But you're not talking necessarily about remittance flows just into the country. You're also talking about a lot of trade-related payments going offshore, and China's strategic position with Africa, given the Belt and Road, is fairly clear. Have you guys thought about joining up with the Chinese digital yuan trials?
Absolutely. We're aggressively looking for digital asset projects to kick off, and it will be one of the first ones out of Africa. I think the expertise is what we are really seeking after, and the experience that they've had with the digital one, and this will be very interesting. Moving away from the traditional funding and settlement models as you would know them, and into digital asset settlement. This with far more information and far more, a lot faster, and far more acceptance. This is something that's within our product roadmap, and we're very excited to kick off this project within the next 4 to 6 months. But there's also many other projects we're very excited about.
So how tough was it to raise financing during the pandemic for a startup like this based out of Africa and Singapore?
Yeah, I think it's a great question. It was extremely difficult to start with. But if you look at, pre-seed, seed investments, particularly from VCs, 4 or 5 years ago, the ticket sizes were well below $250,000 USD. Fast forward now, especially during the pandemic, I think there's more appetite to fund, particularly fintechs, a lot more seed capital. It's now all the way to up to $3 million for pre-seed type seed raise. Of course, the calls are back to back. We had to do the entire fundraising out of Zoom. We got some fantastic VC engagements. As you know, majority of our investors are actually Asia-based, China specifically. So we've got MSA Capital out of Beijing. We've got Keppel African Funds, who are actually out of Japan. And then we've got Eco VC here locally in Africa. So I think to answer your question, it was quite a lot of back and forth. It was a lot harder to get the conversation going, but I think we got a hand on some good VCs who understood exactly what the problem we're trying to solve.
Did you have to do this remotely via Zoom, or did you travel to China?
No, absolutely no travel. So it was all via Zoom, via Booth, via WeChat calls, via Google. It was all on screen. So this was extremely painful at the beginning, as Paul says. But we found some very interesting guys who really understood the business model, and given the traction that we've done in 2020, it was pretty straightforward, and they got pretty excited about it.
So where would you position this in respect to sort of the competitive landscape, and what led you to decide to start a cross-border trade payments business?
That's a great question, Brett, and I think even the time we spent here with you in Kenya, Africa is a very interesting market. If you look at the competitor space, a lot of them focus on the pay-ins into Africa, yet the payouts infrastructure is completely non-existent. I think we're still using the SWIFT system, as well as the correspondence banking model to move the funds. And that's why I say the funding and settlement model has not changed. And we saw a fantastic opportunity. But like Africa, it's a homogeneous continent with very many countries, very many currencies, and we built a fantastic platform. We bring quite a bit of data on the roadmap into very many verticals down the path in offering financial services. So cutting from corporate salary process payments all the way down to individual trader B2B payments and even merchant acceptance.
Let me ask you about the regulators' position here. You've just announced the funding round, and you said obviously you've incorporated in Singapore. You guys both have a pretty good relationship with the local regulator. How has the process been in terms of getting your local license at the Kenya?
Well, it's taken quite some time, especially around the conversation on digitizing remittances. It's not just another simple financial institution attempting to do money transfer. Taking that conversation along and mentioning we want to make it a lot easier, a lot faster for customers to be able to process transactions, and therefore we'll need to use some new kinds of technologies to be able to do so. It's taken longer than most applications, but we've been patient with it. And like you say, we've gotten an opportunity to learn quite a fair bit from the regulator in terms of the things that they're looking at or they're concerned about. But also the Central Bank of Kenya has a very strong relationship with the Monetary Authority of Singapore. And we sort of sat in that middle sweet spot to be able to support them to understand the kind of business model we're building, understanding fintech. And eventually it's looking like we got the light at the end of the tunnel, which technically makes us the first remittance business out of Kenya to be able to do.
That's awesome. And, are you going to need to put some staff on the ground in places like China, or is this, is mainly a tech stack issue?
So in China, it's mainly a tech stack. As you would know, setting up a business in China is not as easy, and that's why we chose Singapore and now going into Hong Kong. Eventually, to be able to set up the business firmly in China, quite a bit more capital would be required. But eventually, we expect to be able to set up in China firmly once we're able to raise enough capital to do so.
Very good. Now, Eddie, is the governor at the central bank the same guy that we met with previously?
Yeah, still the same guy.
Good. Well, Patrick, isn't it? Patrick Njorge?
Yes.
Was that his name? Please send him my regards. We'd love to have him back on the show as well to talk about fintech. So as I just mentioned with the Ndichu boys, we did get the opportunity in Kenya to visit the office of the governor of the Central Bank of Kenya and talk to him about the formation of M-Pesa, or the licensing of M-Pesa from a regulatory perspective, and more importantly, how there was some pressure and some fun and games from the traditional players as M-Pesa started to dominate the mobile money space in Kenya, until eventually the banks worked out they'd be better off working with M-Pesa. But here's Patrick Njorge, the governor of the Central Bank of Kenya.
It's nice to talk to you about financial inclusion and indeed fintech more generally. M-Pesa is really the first of products in the fintech space that really changed the way we do business in terms of banking. And it was in the first instance a sort of a transfer of funds between two individuals, a system that allowed that. And I think the point here is that the innovators presented a sort of a proposal to the regulator, and in this case, the Central Bank of Kenya. And there was a lot of to-ing and froing, going back and forth, looking at the objectives of, in this case, making the transfer in a safe environment, and at the same time, looking at how to minimize the risks that may be implied. So it is actually a product that came into being after the original idea, but then it's sort of refined. So in that sense, there is a design element. It's always important, but I think it is important to understand that really we began from looking at the objectives, in a sense, first principles, and then building on that and providing a product that actually was able to provide the transaction in a safe environment.
I like that idea of first principles. I might use that. Now, at the start of the M-Pesa rollout, there was some resistance from the banks. But when we look globally at fintech, one of the challenges regulators are facing is how do they get these new fintechs and these traditional players, the banks, to play nice together. Now, that's happened on top of the M-Pesa network. So as a regulator, how did you stimulate this type of cooperation between the banks and these new players?
Good question, Brett. Really, the challenge is not so much in understanding new ideas. I think the challenge for everyone is escaping from the old ideas that they are sort of entrenched in. So, and it's tougher to change. Change isn't always comfortable. And I think this is what was clear in this exercise. The point here was appealing to the final consumer. It's the final consumer that actually voted with their feet, or in this case, with their wallet, and saw the product and indeed sought out the product and saw that it was useful for what they were doing. And the growth was, in a sense, just astronomical. And I think that's what then made everyone else see, all other institutions, that this is something that is obviously that has caught on, but it wasn't just fashionable. It was something. It was providing a specific service, which they could also provide. So they have got onto the bandwagon. So I think it is more the consumer. And again, it's not banks. It's not the middleman that decides. It's really, at the end of the day, it's the consumer sees a product that actually provides specific services that they want, and then wants to adopt that product.
Now, the technology has been a great leveler. So my final question to you is, for a young entrepreneur in Kenya, how would you encourage them to keep this innovation cycle going? What do you think's next for Kenya?
I wish I could have a crystal ball and look at it and tell you what would be next and all that. But I mean, more generally, I think the first thing is we expect a lot of new products that are aimed at the consumer. I think there is no shortage of ideas of new widgets, apps, and all those other things. But a lot of them may be just focused on what I can do as an innovator, but not the consumer. So you need to understand what the consumer wants. I think that's the fundamental thing. What is it? What is the gap that you are feeling or your product will fill? Now, from my perspective, there are a lot of products that are needed in terms of, or there are gaps in the area of various consumer services. I've talked before about savings products. I've talked before about insurance products. I've talked before about health products. I've talked before about products that would help smallholder farmers. Those are spaces that are virtually infinite in terms of have infinite need. And that's where I think the entrepreneurs need to come and fill those gaps. Now, from their perspective, I think it is important to encourage them, that is the entrepreneurs, meaning they should not feel that there is only one product that will fill that space. Oh, no. And I think it's only their limit really is their own ingenuity. And from that perspective, I'm very glad that Kenya has a rather deep pool of innovators, people who are interested and are actually in touch with the ultimate consumer. So yeah, let's stand back. Let's see how things go. Of course, the regulator will always be there. All these things need to be put in a context of a safe environment, minimizing risks, so that actually the products work well. So yes, you do need that, and therefore the innovators need to work closely with the regulators. But yeah, I think the sky's the limit.
Can you guys tell us about the impact the pandemic has had on, fintech businesses, digital banks, and so forth, Pan-Africa? You mentioned very briefly that there tends to be deeper pockets for investment in fintech now, but is that because fintech is heating up? Give us a bit of perspective of how the pandemic has impacted fintech there.
The pandemic has really actually helped a lot of fintechs. As you would know, a lot of things are getting digitized now. And it's not just, new business models, existing business models. People are working from home. So we're seeing actually an increase in traction for digital businesses, particularly for fintechs, that need to build further greater solutions for people to use. So it's worked out quite well for fintechs. But I think broadly, if you look at our business model, we focused on termination of funds into China and Southeast Asia. This is because Africa is a net importer. I think 85 to 90% of everything we see here in Africa is imported out of Asia. This is the tune of almost $300 billion every year. We're looking to tap into that stream of value of these payments and just make it easier for people to pay into China and Asia. With the pandemic, it's actually brought a demand for new fintechs to think about solutions that people can use, not only just to continue and facilitate trade, but also, build new opportunities for young people, for Africa. I think we've got the mean age of about 25 years old across Africa, and you're looking at 1 billion people. So yeah, I think two things. One, pandemic has helped, these solutions come up in the forms of fintechs, but also secondly, giving people opportunity to start businesses across Africa. But also, Brett, it's not just pure fintechs, getting momentum or getting funding. Although we've, of course, from West Africa, you've seen a couple of unicorns come up in terms of pure fintech plays, but we're also seeing on-demand players and marketplaces players get some strong funding. With people having to stay home, people are having to rely on deliveries. People are having to rely on mobile and internet communication to be able to buy and sell, and this is making the environment pretty interesting. I think we've just sped up about 2 to 3 years.
Yeah, I mean, my view is obviously e-commerce has seen a big increase. I've seen numbers coming out of Kenya and Nigeria talking about 40 to 60% in increases in some cases. But obviously, the really interesting fintech market potentially is sub-Saharan Africa for the unbanked. We see in LATAM with Nubank, and we see in southern China with WeBank that some of the digital pure play operators are getting very, very good at servicing the low to middle income unbanked space. The poorer elements of society who've never had a traditional bank account. Are you starting to see solutions like that take shape, particularly for the sort of billion unbanked in sub-Saharan Africa?
Absolutely. And actually, one of the fascinating things is mobile money has just allowed for money to move a lot faster and a lot easier through mobile phones, and people can now affordably, majority of Africans can access a mobile phone before they can even access financial services. What's happening now is, on top of mobile money, is new products, new financial products are being introduced to consumers. Digital lending was the first one to kick off, but now we're seeing all the way from savings to FX trading, and people being able to be educated on USSD, or how to buy a foreign currency like US dollar. We've got an interesting fintech trying to do this. We've got a lot of customer education happening to allow them to save. And of course, definitely around insurance. We've seen some very good funding for digital insurance in one of them out of Kenya. And Brett, what's really making these fintech or financial products accessible over and above education is largely mobile money, because of how easy it is to move the money from the customer, and being able for the customer to be able to access the product.
So people can understand this, compared with physical debit cards you'd get with a traditional current account, in across Africa, comparing that with mobile money, what would you say in terms of day-to-day discretionary spending? Where does that sit today in terms of debit cards versus mobile wallets of the mobile money type variety? Are mobile wallets outpacing debit cards? How would you position that?
Well, like, if you remember me, Brett, I speak straight. The sad thing is that it's never changed. It's the amount of cards being issued has always been flat. It's never changed ever since you were last year, for instance, in Nairobi, Kenya.
Wow.
The number of ATMs are actually going down, even given the pandemic. People were being asked during the pandemic to stop using instruments like cards, use more of mobile money. What this did, Brett, is it got people to very quickly register with their mobile banking service with their banks. And what we're seeing is for every, I would bet for every one debit card that is issued by a bank, about 100 mobile banking activations are being done, and that's because people like M-Pesa made moving bank money from your bank account to M-Pesa to be able to pay completely free, from literally 1-2% to absolutely zero, to be able to just simply use the money on your phone. So debit cards are a mere single-digit percentage of the kind of activations we're getting out of mobile money. But what's even more interesting is mobile apps and USSD apps and mobile banking services are now largely are getting mass market acceptance, because the dependency now is on mobile money. The interesting thing is the share of wallets is quick, especially for the unbanked or the debanked, especially from the youth who, if you turned 18 last year, you couldn't open a bank account because of the pandemic. But you could very quickly activate your mobile money account. We're seeing quite, like I said, we've jumped 2-3 years, and we're seeing mobile banking activations more than when I used to be in banking, and then that's pretty interesting and that's pretty exciting.
Let's take another quick flashback, this time to how I got my first M-Pesa bank account or mobile money account in Nairobi.
You now have an M-Pesa account, so we are depositing this cash into your M-Pesa account, and from there you can either send the money, buy airtime from M-Pesa, or send to someone, withdraw if you want it in physical cash. That's what she's currently doing it.
Now, any M-Pesa agent can do this process for me?
Yes, they can. They have been empowered to do all this we are doing over here.
And what was it like using M-Pesa on the streets of Nairobi? Well, in this example, I got the chance to go to Planet Yogurt and do an M-Pesa transaction to buy yogurt there, finding out that people preferred to use mobile money rather than cash. And obviously, M-Pesa's influence has increased since those days back in 2017. But even then, over 60% of transactions in these mom and pop stores or franchise stores were done with M-Pesa, not with cash and not with debit cards. Okay, so we're here at Planet Yogurt, and I'm going to buy yogurt for myself and Eddie at this M-Pesa agent. I go into Lipa na M-Pesa.
That's it.
And then I'm going to buy goods and services.
Yep.
Now it's 707 shillings. I've got the till number. I have to enter the till number, 825030. Send. And it says, what's the amount? So it's 707. Yeah? Send that. And I enter my PIN. Don't look at my PIN, Eddie. I'm not going to read out my PIN. Do you want to buy goods and services from 825030 for 707 Kenyan shillings? Yes, accept. And sending. Now I got a confirmation. Did you get a confirmation as well? So you've got your own phone here,
that you get your confirmation on, and I get a, hey, thank you for visiting Planet Yogurt.
So that's the value added.
That's the value-added services that you can have in it. So Rita, how long did it take you to get the receipt from when I paid for it?
Confirmation, it's almost immediately. Once you get your confirmation, I get my confirmation. It's simultaneously.
What percentage of your transactions are done on M-Pesa in the store?
M-Pesa, it's actually 60% of transactions. People use M-Pesa nowadays.
Wow.
Yes. People don't trust cash as much, so M-Pesa is the best so far.
So people trust M-Pesa more than cash these days in Kenya?
Yes, they do. Yes, they do.
So tell me, what does Planet Yogurt do?
Planet Yogurt, we sell frozen yogurt, clearly, and fruits and candy. It's a fun thing to go, and it's self-service, so it's really nice.
Well, I'm going to try the yogurt now. Thank you very much, Rita.
You're very welcome. Enjoy.
From the sounds of it, I mean, it's 4 years or whatever since I've been there, but by the sounds of it, the banking sector, apart from sort of co-opting the mobile money stuff, and obviously, we spoke to KCB and Equity Bank and others who have partnered with mobile money platforms and have done so very successfully. But with the exception of that, being able to supplement sort of savings plans and some access to credit through the mobile money platforms as a distribution channel for them, it doesn't necessarily sound like there's been much revolutionary rethinking of the design of basic bank accounts to compete side by side with mobile wallets as yet. If you play this out 10 years, how do you think it's going to look across Africa in respect to wallet use and the dominance of that for basic mobile banking?
Yeah, that's a great question. So I see mobile money infrastructure playing a significant role in being the base infrastructure for financial services and products, and not just payments. And unfortunately, it will not be the banks. I think a lot of the funding and a lot of the capital would be sitting in the banks, but I think a lot of the products and services, whether payments, insurance, or savings, whatever it is, will largely be moving through new businesses and fintech startups. To put it to perspective, and the reason why I say this, if you count all the branches for all the banks in East Africa, for instance, and all their agent outlets, they're basically 30 to 40% of all the mobile money outlets across East Africa.
Right.
So that already kind of tells you the infrastructure for mobile money exists. We're talking about in Kenya alone, 200,000 agents, and we only have about 2,000 branches and 1,500 ATMs and 10,000 agents. I mean, it's almost a fraction of the number of mobile money agents there are. So much so that fintechs like ourselves, the on-ramping for fiat or the access of funding, would love it to be largely from banks, but the infrastructure just isn't there. Is the banks aren't making it available, and we're largely relying on mobile money. It's just that we're controlled by limits. But I think it's a matter of time. And I think when you look at markets like Kenya, for instance, it's how do these mobile money platforms support or assist these banks to be able to avail the infrastructure to get value out of bank accounts, for instance, as opposed to them trying to figure it out themselves, given that they're already integrated to them.
And do you see fintech licensing, particularly for things like payments or deposit taking? That seems to be gaining popularity, or the ability for non-banks to come in and play in this space. Are you seeing broader regulatory acceptance of the role of fintech and mobile money in the economies?
I think eventually it will happen. It's not there yet. For instance, we still don't have a fintech license in East Central or West Africa. What we're seeing largely today is that there's an acceptance, and people are sitting on the table to have these conversations. And how do you regulate fintechs and financial technology companies. We've seen, even Kenya issue some license to some interesting companies who they've been there much longer, but would fall under fintech. But I think their biggest concern is not wanting to regulate them within the same framework that they're regulating other financial institutions. So they've sort of got to change their own policy, even all the way up to Treasury level, to provide for the ability to effectively regulate fintechs. For instance, in Kenya, the digital lending platforms just got their approval to be able to list customers on the CRBs, which is a step forward, I think, by a central bank. And I think one of the things they're thinking very hard about is in what framework do you regulate them, and how do we sort of keep them all close together? How do we get them to do the reporting back to us? How do they do their governance, etc.?
Right. Well, guys, unfortunately, we've run out of time, but I really appreciate you joining us all the way from Nairobi. Could you maybe just tell us where can people find out more about WappyPay, and how can we help from offshore?
Absolutely. So you can go to WappyPay.com, www.wappypay.com, or you could go to, if you wish to transact, you could go to global.wappypay.com and quickly register, and we can get you testing or trying out your first transaction. You could also subscribe to WappyPay, and somebody will get in touch with you on how WappyPay works. But even more importantly, somebody will get to talk to you about where in the world do you pay. You can also send us an email on jumbo@wappypay.com, and you can follow us on the WappyPay hashtags on LinkedIn, Facebook, Twitter.
Jumbo, yes. Well, thanks, Paul and Eddie, for joining us all the way from Nairobi, and we really appreciate you giving us an update on the African fintech scene as well. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.